was a Tesla truck with an Amazon trailer.
Thanks for joining us once again. Today we focus on the relationship between Tesla's stock price and what's going on with the tariffs. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy the show, like some better ideas on investing and trading, please join us on Patreon. So we kind of have three parts to this show today. The first part of the show is kind of the Warren Buffett look at things in terms of process. The second part of this show is obviously reviewing what exactly is going on in light of the Warren Buffett discussion. And the third part of the show is how are we looking going forward. So I have to share I've been reluctant to do this show because from everything I see, I believe the market's going to get cut by 25%, perhaps even 50%. And as we all know, one of the biggest problems with where we're at now is that the highest PE stocks like Tesla, like an Nvidia, all these other names, those very high PE stocks usually get hit the hardest when the market starts to crater. So in the case of Warren Buffett, he pointed out that Warren has accumulated, at last check of 3 weeks ago, he'd accumulated about $350 billion in cash and was going heavily towards cash as Mr. Trump came into office. Now that I've seen this, I can stop asking the question, you can stop asking the question, why is Warren Buffett accumulating huge amounts of cash and getting out of the market? And I think we have the answer now. So the next issue that pops up is there's a whole discussion of a concept called flight to quality, or obviously pulling out of the markets. So where we are right now, obviously, is that first Mr. Trump went for the tariffs, and now we're having retaliatory tariffs come in from trading partners. I don't believe this is good news on either side. Unfortunately, I think consumers are going to get hit with higher costs. And those higher costs result in sort of a lot of people losing sales and profits in the process, and consumers paying higher prices in the process. So I just think the overall outcome is not very good. The biggest part of this discussion I wanted to talk about today is we always had this conversation going between different types of capital and how they react to certain things. Now, the answer here is clearly that there's a lot of folks who've made good money and have ridden certain stocks like a Tesla, like an Nvidia, to very high numbers. The problem now is that as we see the manifestation of the response to these tariffs, I just think the market is just going to get a haircut. How big a haircut? Well, as you probably know, Tesla went from 420 to the last I checked today, it's at 380. So, that's a decent size hit. Let's call that 10%. We still, I believe, have another between 10 and 20% that should happen as we see the responses to the tariff and this is worked out. I'm actually got my fingers a little bit crossed because I'm hoping that this is a negotiating tactic and not something that's going to stay in place permanently. But at this point, part of the reason why people are exiting the market is that from what we can tell, anything goes. The possibility of stuff even more negative or positive, anything could happen, and we do not know what that is going to be. Sidebar note, I have to say I'm really stunned because Mr. Trump keeps asking Saudi Arabia for oil prices, but Saudi Arabia has actually cut their oil production by 20% as a way to boost the price of oil up. And the only way I see them being able to lower prices, which they've not agreed to do, is by increasing their production without similarly seeing declining production elsewhere. I have to say that I believe that fewer, everything will start selling because the prices are rising and there's a limited number of dollars consumers have to go into whatever their purchases might be. And as those prices rise, it just reduces the amount of purchases that are viable. So the next thing I wanted to review is how do you react to this situation? Well, there's a famous number that I often mention to you, and that is 69%. And that is that 69% of the cash out there is in retirement accounts. Of that 69% of the investable cash, there's probably 78 to 80% of that that's involved in a thing called capital preservation. So the goal of all these people is not to have a get rich quick scheme. The goal is to preserve capital, get a modest return, but have enough cash to live on through their retirement years. So when the market starts falling like it is now, as those analysts and so forth are meeting with their clients, I believe we end up in a serious capital preservation move. And being in cash heavily is a way better move than being in a market that could take a 10, 20, 30% haircut. So I just believe that a lot of bonds are going to be bought with that cash or money put into money market accounts, etc., as a way to preserve capital, which means that capital is not in the stock markets, which is one of the reasons why those prices will fall dramatically. How soon before this happens? I think over the next 4 or 5 days, a week, we'll see that happen dramatically. So what should you do in this situation? I believe, we've talked a lot about the whole idea of puts. We've actually discussed the fact that if you want to drop us a note, I'm happy to work with you to introduce concepts of options trading to help hedge your portfolio. The nice thing is if your money is in your retirement account, you can sell stuff and there's no tax consequences. If it's not in your retirement account, if you sell it, you get hit by taxes along with having sold it. But it's better to have sold it than get blown away because the value is down 25%. The next thing I wanted to review today is, well, there are, I guess, 3 options. We've gone through the sell it, hedge it, and that obviously, I guess there would be another option, which would be, what about buying more? There is something called dollar cost averaging where people will continue to buy stuff, anticipating that the market downturn you're seeing will abate, and then you could make some money. And something like, let's say Facebook, I could see that, maybe even Nvidia, but in general, I just think we're headed for a really ugly market space here. And I think it's prudent to really pull back aggressively. Again, I think Warren Buffett's a brilliant man. He operates on long time horizons, and he's made obviously a lot of money. And I have to say I agree with the logic of what he's doing, and he's not necessarily telling people to do it, he's just doing it himself, and you can figure it out from there what you should be doing. So overall, I would say I believe we're in a really, really tough spot right now, and it seems to me that our leadership is more inclined to fight with our allies than to work with them to come up with solutions that serve everybody well. And so, there's an argument that there's always fear or greed in the marketplace, and you got to figure out which one we're in and where we're going with it. I really think that this is your opportunity to get out before we see a huge pullback across the entire market. The last idea I wanted to share that I think really affects what's going on here is that usually when there are large decisions to be made, you have all these experts on different subjects that get together in conferences or reviewing the historical trends or process, and then you see action based on all of those, put their heads together to make a great call that serves everyone well. In this case, we're doing what I want to call on-the-job training. I believe Mr. Trump is trying out different ideas to see how they work out. And tanking the economy is definitely a possibility, but the hope is that he can modify what he's doing to get a better outcome if we see complete destruction start occurring. I hope that that's the case. I don't know, but I think that nervousness is part of the reason why we're seeing people pull out of the markets, and we'll see them sitting in a lot of cash um, for the foreseeable future, especially until we find out, well, what's the clear plan, process, time frame, etc. And until then, I just can't see anyone not staying in under those conditions without being properly hedged or just sitting in cash, waiting out everything that might occur. We look forward to sharing more with you in this realm as we see more data. Want to encourage you from our health tip area. Just a reminder, prior to lovemaking, as we go towards Valentine's Day, don't forget to have a very light meal prior in order to make sure that instead of the focus being on your stomach, you have all your extremities are accepting that blood flow for more enjoyment. Also wanted to encourage you again, 25 leg lifts a day to make sure you're strengthening the quad muscles and therefore strengthening knees, lower chance of knee work needing to be done. Also wanted to encourage you to get 20-minute walk in every day. Also on that walk, I wanted to encourage you to consider what's called intervals. All intervals are is if you're going for a 20-minute walk, every 3 minutes or so, you do a little power walk extremely fast, and then go back to your normal, easy walk. It increases the intensity of that exercise, which I think will serve you much better. Once again, I wanted to thank you for joining us. This is Greg for Teslafaninsight. Please like and subscribe. Appreciate any and all help on Patreon. And we look forward to your suggestions on show topics, etc. Once again, thanks. Have a great day.